all of you. Good afternoon once again. I hope you finished the first video. The first video you must have finished, and the second video is about recently. I think just last week only you have seen in the newspaper. Reserve Bank of India governor gave a marathon lecture for about 1 hour on TVs um, with regard to reverse repo rate and the latest policy cut by Reserve Bank of India. So this is very important, as I told you earlier in my regular live classes. Um, Anything related to money and banking, especially the policy issues which are announced by Reserve Bank of India, are very, very, very important. So make sure that you are not at all skipping any of these points. All right? Yes. The first one. What is the current scenario? The current scenario, if you could see, the economic slowdown is because of one very important thing. That means currently the Indian economy is slowing down. The growth rate is already very less. Last few years and couple of years, if you could see, the growth rate was very less. And over the years, every time when the growth rates are less or more, one of the very important rate Reserve Bank of India announces to adjust the economy, to readjust the economy is actually the cutting down the interest rates and adjustment of um, repo rates, etc. The second important things previously, whenever there is an issue in Indian economy related to money supply, Reserve Bank of India used to increase or decrease repo rate. But for the first time, I mean, in other words, for the first time in the event of COVID-19, Reserve Bank of India has taken reverse repo rate as a policy benchmark rate to readjust the economy and restructure the economy at this current scenario. So what you do when, if in case any point I read it very fast, I explained very fast, make sure you rehear it once again so that you'll have a clarity on that. And if in case still there is a doubt, please send an SMS on WhatsApp. I would be able to reply to you about any doubts regarding these topics, because these are very critical topics for you to understand in a simple way. Okay. So the current economic situation in India, one by one, point by point. So please try to understand. So before that, I want to tell you what exactly these two rates, like reverse repo rate as well as uh, repo rate. See, repo is an interest rate at which Reserve Bank of India lends money to commercial banks. Repo is the interest rate at which Reserve Bank of India provides money to commercial banks. So the reverse is that. That is, reverse repo is the rate at which commercial banks lend money to Reserve Bank of India. In other words, commercial banks will park their money with Reserve Bank of India. So that is reverse repo rate, right? When there is a liquidity in the market, when there is an excess liquidity in the market, and because of that, if there is an increase in inflation, Reserve Bank of India might increase the reverse repo and ensure that the money with the commercial banks, which is leading to increase in money supply, will be attracted back to Reserve Bank of India. I repeat, when there is an excess money supply in the market, if that excess money supply is leading to inflation, Reserve Bank of India will try to increase reverse repo. I repeat, Reserve Bank of India will try to increase. Sorry, Reserve Bank of India will try to increase repo rate so that money becomes very costly, and so that they won't lend money. That means when commercial banks have a lot of money, they keep lending money. When they lend money, it leads to inflation. To control inflation, repo rate normally will be increased. In other words, both these rates, because these are all quantitative restrictions which are normally used by Reserve Bank of India to control money supply. So all these like bank rate, repo rate, reverse repo rate, SLR, alright, all these rates will be increased to control money supply, thereby inflation will be controlled. But what is the current scenario right now? On account of COVID-19, there are no economic activities going on, and banks are no more interested in making fresh investments, which means when banks are not interested in making fresh investments, they don't want to borrow money. When they don't borrow money, they have no money, and the money which is already there with them is already overflowing with them. They're not lending money. When they're not lending money, money is not pumped into the market. When money is not pumped into the market, obviously people do not have money. When people do not have money, then aggregate demand, in other words, consumers' demand will be decreased. So look at the first point. The India's economic growth has decelerated sharply. Last few years, everybody knows. Next, the reason why Indian economy growth has been decreasing last few years is basically decrease in aggregate demand. As I told you, aggregate demand is something which actually pushes the economy upwards. The growth rate of any economy is dependent on aggregate demand. People have to people have to buy goods and services, and money has to be pumped into the market. This cycle of activity has to continue. Unfortunately, this aggregate demand is very less in India. Alright, that is one thing. So therefore, businesses are cautious in making fresh investments and so do not ask for many new loans. In the sense, banks have decided not to, businesses have decided not to make fresh investments in the event of there is no demand. When there is no demand, which means their goods and services are not going to be bought by the people in the market. When goods are not bought by the people in the market, obviously what happens is businesses will not make fresh investments. Right? Next thing, pre-existing incidents of high non-performing assets. In the sense, already banks are facing one problem, that the existing loans which are already given are not repaid. Non-performing asset is an asset where the loan granted, neither principal amount nor the interest rate is coming back. So it is very risky for banks, in fact, to lend money into the market at this point of time. Then the next important thing, banks demand for, so overall what happened in the Indian economy recently is this point: banks demand for fresh funds from RBI has drastically diminished. This is intensifying ongoing lockdown. That means already in the existing economic system, aggregate demand is less, businesses are not making fresh investments, and banks are not in a position to lend money because there is no demand for loans. In addition to this, the current lockdown that is going on right now due to COVID-19 has intensified this problem. So the banking system is now full of liquidity. In other words, banks have a lot of money with them. There are two reasons. Number one, RBI has cut interest rates and other policy variables. That means, say for example, CRR has been decreased over the years by Reserve Bank of India to ensure that money will be pumped into the market. If CRR is less, which means interest rate charged by Reserve Bank of India is less, banks will borrow more money and banks will be able to lend more money into the economic system, and that is not happening. Next thing is, banks are not lending to businesses. So there are two reasons why banks at present have a lot of money. Number one, on account of decrease in CRR, many banks were able to get funds from RBI, and banks have a lot of money. But unfortunately, banks are not able to lend that money. Am I clear? The next thing, important thing is, banks are not lending to businesses because businesses are not making fresh investments. This point, the third point, if you could see, if businesses are not making fresh investments because of no aggregate demand in the market, definitely banks will not find a way to pump their money out. There is no exit of money from the banking system. So there's a lot of money. So at this point of time, what the banks will do? Banks will try to keep the money in a place wherever, whichever it is profitable. Most profitable thing other than lending to the public is basically keeping the money with RBI. If banks keep money with RBI, definitely RBI will be paying a rate of interest that is called reverse repo, right? So recently what happened, Reserve Bank of India has cut the reverse repo rate so that banks will not park money with whom? Reserve Bank of India. And instead what do? They will try and be ready with the money to business people, especially small and medium scale businesses are affected very badly. The moment as early as possible when the lockdown is getting eased out, banks must be ready with the funds and these funds will be pumped into the market. You understood now? If in case you could not follow it, please once again listen to what I said just 2 minutes before, you will be able to understand, right? What normally is the benchmark rate. Benchmark rate, if you could see, this is the rate. Fourth point, you see, it is the lowest rate of interest at which funds can be borrowed. That means below this rate of interest, nobody or no bank or no financial institution will be interested in lending money. Alright, so repo rate is the rate at which RBI lends money. Reverse repo rate is the rate at which commercial banks park their money with RBI. Right now, commercial banks should not be allowed to park their money with RBI. If reverse repo is more, definitely they will try to keep money with RBI because they will earn more rate of interest. Instead, if reverse repo is less, then they will not try to park more money with RBI. That money will be made available in the market so that as soon as business is opened up, this money will go into the market. Yes, that is the thing. So right now, the benchmark rate, the policy rate, Reserve Bank of India is actually using to restructure the economy to make sure that the funds are available to medium scale and small scale businesses, so that we will be able to increase aggregate demand. Is reverse repo rate. Why reverse repo is significant now? Look at this. The source of lending to businesses for commercial banks are of two. That means source of lending to businesses for commercial banks are primarily of two. Number one, they receive money from the public in the form of deposits. Number two, they borrow money from RBI. Alright, everybody clear? So, as mentioned earlier, there is now excess liquidity in the banking system. This means that during March and first half of the April 2020, banks have been using only reverse repo. So, since there are no loans given outside, they need to have a place to park their money and earn money. So, therefore, they started parking money with RBI since there was a better reverse repo rate interest. Like this, Reserve Bank of India had close to 7 lakh crores of banks' money parked with it. This is the money which has travelled back to Reserve Bank of India because reverse repo was very high. So what is the high situation? What is the immediate situation right now? You can immediately guess. Reverse repo rate has to be cut down so that money of the commercial banks will not go to Reserve Bank of India. Instead, that will go to the economy as soon as the lockdown is eased out. That is the reason why government is trying to relax many industries to get into this mode. Alright, next one, analysis of reverse repo and reverse repo. See here, the red line is repo and the reverse repo is this 3.75. Alright, and what is the RBI objective in reducing reverse repo rate? Very simple. Overall funda, if you understand, banks have a lot of liquidity and they're not able to lend money outside. Since they're not able to lend money outside, they've been parking money with RBI since reverse repo rate was very high, which means banks were earning lot of interest from RBI. If this continues, money availability with the banks in turn with the business will be very less. Therefore, this flow of money from commercial banks to Reserve Bank of India has to be reduced. So it's like this, banks doing nothing with their funds will definitely affect the economy, and therefore we need to make banks giving money to Reserve Bank of India less attractive. I repeat, we need to make banks lending money to Reserve Bank of India very less attractive. Will this really, yes, overall all the points, if you could go through carefully and let me know if there is any doubt. Yes, definitely it will revive the economy because now reverse repo rate is decreased and the money flow from commercial banks to RBI stopped, in the sense decreased. Then this will in turn benefit businesses to borrow money at a cheaper rate of interest. When they try borrowing money, money will be pumped into the market. Definitely loans will increase and this would at least will increase aggregate demand, thereby economy will start having a momentum and it will be on the track. Alright, that is one thing. So actually what should be done? In other words, what could be done? So banks could be offered credit guarantee, say 10% of credit. That means if any banks are offering micro, small, medium enterprises loans, Reserve Bank of India, it's better to offer 10% credit guarantee at least, right? In other words, those banks which are helping MSMEs must be encouraged. All right, and government has done similar thing recently. Bank encouraged banks to lend to the stressed non-banking financial companies. I mean, most of the non-banking financial companies, uh, the banks which are started specially to buy stressed assets have been encouraged recently. So, in other words, overall, we can say most critical segment of the economy is a small scale industry where there's a lot of employment and lot of it's a wage intensive economy. So we need to induce confidence in MSMEs, and for that we need to have adequate liquidity from the banking sector. So this can be done probably to certain extent by uh, this reducing reverse. So this would definitely help the economy to revive. That's all for now. Please go through it, and any doubts, WhatsApp me. I will be able to clear it off. Thank you so much. Have a nice day.